Cashflow Diary Podcast, episode 331.
Welcome to yet another exciting episode of the Cashflow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's Cashflow game, Jay Massey.
All right, ladies and gentlemen, welcome to another episode of the Cashflow Diary Podcast. I'm your host, Jay Massey, and I'm glad that you are here today because we are going to talk about cash flow from yet another new perspective. Now, you're like, Jay, how many times and ways can we talk about cash flow? I'm telling you guys, there's a lot of ways to go out there and skin this cash flow cat. And I know that some of you are going to be excited about what we're going to be talking about today because we've never talked about it. And more importantly, I think some of you might even be able to take some very definitive action by the end of this particular episode that would actually get you started on your journey. So if you've been itching to start, probably now's the time to make sure that you pay attention to today's guest, who is none other than Kirk Du Plessis. Now, if you don't know him, you will soon. What do I mean by that? Well, he's an stay-at-home dad. I love that because he's also a full-time option trader and real estate investor. He's been a former M&A, mergers and acquisitions investment banker for a number of, those really big guys that you have heard of, like Deutsche and BB&T Capital Markets in DC. Now, what's interesting today is that he invests a lot of his time with his own podcast, Options Alpha. And now what's really interesting is that he's got a number of members that are following him and out there going into the paper asset markets, working this options game, and more or less making it happen for themselves. And today, he's going to share his wisdom to hopefully make it happen for you. So help me welcome Kirk Du Plessis. Kirk, you there?
Hey, thanks for having me on.
I'm glad that you are here, sir. So, this being the first time that you're here, however, I tend to ask everybody the same question the first time that they're here. Are you ready?
Let's do it.
All right. So I tend to look at today's entrepreneurs a lot like yesterday's superheroes. You know, Batman, Robin, Wonder Woman, Black Panther. You know, you pick. And right. I think entrepreneurs and superheroes have a ton of things in common. Occasionally we get dressed up. You know, we think we're putting on capes, saving people, using our special skills and abilities, helping our customers, save themselves. And I think entrepreneurs, we can vision ourselves that way at times. Now, also like superheroes, I think we have a beginning. What I mean by that is simply, before Spider-Man was climbing walls, he was just Peter Parker taking photos. That's what he was doing. And the question then becomes for you is before Options Alpha, the show, the blog, your memberships, before doing the mergers and acquisitions with all these
right.
high-level institutions, before the real estate options and everything else that you are currently known for today, we want to know, who is Kirk Du Plessis?
Yeah, just I guess as much of a normal guy as you could expect. I mean, I honestly, I joke with my wife, there's not anything special about me at all. I'm just a regular guy. I live in Pennsylvania with my wife and kids. Went to a normal high school, went to college, graduated from there. Just started on this journey. And I guess, the biggest thing about me is just I love projects. I don't know. That's what my wife calls them, is projects. I need to always have something I'm working on, right? Like a life project, a monthly project. I don't know. Maybe that's my entrepreneurial side, is, just always having a project, something I'm working on, whether it's website or, developing software or, real estate stuff. Always got to have a project. I just cannot sit still and not be busy.
Interesting. When you say a project, is that something new that you haven't done before that you now are trying to tackle the new mountain?
I don't know. I feel like there's always a couple that I'm always like trying to climb, right? So there's, my, Mount Everest that I'm always trying to get to. Eventually I want to, build up my, business and our real estate business, and, eventually sell those maybe far down the road. But, there's always something that I'm interested in doing, and I'm never really satisfied. Like, I don't think any good entrepreneur is really ever satisfied. As soon as I hit one milestone, I'm like, okay, that's great. And then my wife is like, hey, why don't you celebrate? And I'm like, no, I think I'm ready just to go after the next one,
I think what's funny is that I think my wife and your wife could probably have a very long conversation there.
Well, she just wants to celebrate all the time, and I'm like, listen, we just got to get to the next one. She's like, no, you got to celebrate this one. I'm like, yeah, that's in the past. Like, we've already done that. We've been there. Let's now we got to go to this, right? So but it's fun. I mean, it keeps me energized, keeps me alive, always working towards something.
Interesting. So how long has this been we'll call it a healthy obsession / addiction for you?
Yeah. It's honestly started in high school. Like, I was a good student in high school. Like, I can never remember doing homework in high school, to be honest with you. Like, I probably did it like in between classes, and I was always like a decent student. Like, I got, A's and B's, but I never really tried. And so like for me in high school, like I loved, finance, investing, numbers, math, all that stuff like that. I used to go to conferences by myself in high school. I would like skip out on high school and like go to like 2-day seminars, right, in DC by myself, like the only, 15-year-old in the room. But that's what I like to do. And so, that's really just like kind of continued on. And really it even starts with like my family. So my parents have been in the mortgage industry forever. I mean, for as long as I've known, they've been in the mortgage industry. Before that, my dad ran his own like mechanic shop. So he was like a small business owner and, turn a wrench for a living. And so I jokingly say, my family, like our family vacations were to like open houses. We would explore new markets. Like, we would do like business seminars, and I'd be putting papers out for my parents. So I've always been like in that environment, in that arena, if you will. And so really it just continued on from there. And it just, as I matured, I guess, and as I got through college and stopped listening to what everyone else said I should be doing, going through school and through college and jobs, then I really, found exactly what I wanted to do and like where my passion was. And then, from there, it's, I don't know, I say it's exploded, but it's been like an 8-year overnight success. And I don't even feel like I'm not even like a 10th of the way to where I want to be.
Indeed. We'll talk about that overnight success in a moment, but I just want to make sure I heard something clear. Did you tell me that you skipped school to go to school?
Yeah. I would go to seminars. It's crazy.
That's what it sounds funny.
It's crazy. I would go like when Invest Tools first came out, those of you who are familiar with like Invest Tools, before they got bought out and everything, like they used to have like 2-day seminars in DC. And I was like, oh, okay, I'll go to that. Like they're free. So I'd be like, I'll go to that and, learn about that. And I'd go to real estate ones that guys were putting on, and, there'd be 15 people in the room and I'd be the only 14-year-old, like, I like doing that stuff. Like I'm interested in that, like just like constantly gaining more knowledge and education, like all that. I like that stuff in the business context than I, ever did in like, science in school and, that kind of stuff.
I'm just trying to figure out how do you punish your kid for skipping school to go to that? It doesn't make sense.
Eventually my mom started taking me, is really what it was. Like, and thank God she started taking me. She's like, listen, if you want to get there, she's like, I'll just drive you. I'm like, well, Mom, I can like find my own, I get there, we live outside DC, we got the metro, we got the bus, like I can get there. And she's like, no, I'll just go with you. And so honestly, that's what it was. And I'm so thankful that she did that, because toward like my junior and senior year, like we would go to these things together, and she would, call me out, quote unquote, sick to go to these things.
Wow. That's unique for sure. That is unique for sure. I love it. Okay. So, take us from there to how do we get into, the M&A markets and then eventually decide to make this exit to do your own thing?
Yeah. So really where it started. So when I went to school, I went to school to to actually play football. And so I went to a school in Pennsylvania, just a Division II school. Eventually it's where I met my wife, still married to today. And so when I went to school originally there, I started down the business track, the finance track. Eventually realized that school probably wasn't going to get me to where I wanted to go. So I transferred to UVA, which is in Virginia. And at UVA, which is a much bigger school at the time that we graduated there, and I think actually still it was ranked the #1 business school in the country, right? So everyone there was high level, international students from all over the place. Everybody in my class went to New York and worked on Wall Street. And so like I just like naturally, I guess, at that point in my life, like kind of followed the herd in the sense of like, oh, okay, well, everyone's going to New York and this is a top business school. So I guess that's where I'm going to go. And, that's what I'm going to do. And that's, where I'm going to be. And so I went to New York. I, worked for Deutsche Bank, which is a German-based bank, literally right on Wall Street. Our office was on 60 Wall, and worked in their M&A division, and really realized like in the first year that I really did not want to do that. Like the 80 to 100 hours a week, like you guys are crazy. Like, why does everyone want to come up here? Like, I get the money was great. I get the connections was good. It, is like high prestige, type of situation. And don't get me wrong, like I learned a lot being there, but I realized really quickly that is not like, that was like the furthest thing from what I wanted to do, in all reality. But during that time in New York, I actually had a rotation on a trading desk. So I got an opportunity to see kind of like what it was like at the professional high bank level, which is much different than going through a class and doing long form calculations of Black-Scholes models, right? Like I did that in school, I passed those classes, got the degree, but then when you actually see it happen, like anything else, you see the application, much, much different. And so eventually I, said I didn't want to do the banking thing, started trading options at that point, transitioned over. I was a REIT analyst, which means I did all the stock research reports, and I would go meet with the CEOs and CFOs and ask them about their growth and what they were doing and how their company was doing, and publish the report. And again, just realize that that's not really what I wanted to do. I mean, like to be totally honest, that industry is so ridiculously backwards as far as like what actually happens and what your managers / CEOs of your company would say. Like I would go and meet with them and they'd be like, things are okay. And then I take that back and I start writing my report. And, I get some people that say, probably shouldn't say that because we've got some people that we need to sell this research to. Right. So there was so much of there was no like third party, like separation, right? Like everything was so interconnected. It's like, what am I doing this for? Like I'm writing what I think to be, like a truthful, like recommendation on the stock, but that's not really what my, bosses and their bosses and their bosses want to actually see come out of me. Right. So again, I realized very quickly that that's not where I wanted to be. And then from then on, it was really just about, going to home and starting to trade by myself. And that's really what I've been doing.
Got it. Love it. From the inside out. So let's catch everybody up though, however, because I can do this on occasion. We're, relative experts in what it is that we do. We've done it for a long time, and we can make an assumption that everybody understands what words mean. You used Black-Scholes model if you could please explain that for those that are probably got stuck back there saying, what was that? And
so I can, Well, I can tell you one that nobody needs to know what it is to be successful doing it. All it is just the model.
That was really what I was after right there. But go ahead and explain it.
Yeah, that's the key. And I'll just explain in 2 seconds because it doesn't really matter. It has no like correlation to your success. But all it is the formula for calculating the value of an option.
And see but I knew that if you didn't say that, someone was going to go off into some black hole. and sit there and go, I can't do this. And right.
Black-Scholes hole.
Yeah. They were going to go off into that, before they decided that I can't do anything until I know what that meant. So I had to make sure that we covered that. Now you went from there to trading on your own, but yet there's always this moment in every superhero's journey, if you will, entrepreneur's journey, that they realize, hey, I got a special skill here. And then they have to decide, am I going to use it for good or evil? And you, in this case, you had to make a very similar decision of, hey, I've got something here, and I'm going to leave all this other stuff behind. So talk to us a little bit about that transition from working at, Deutsche Bank and doing those things to the conversation with your wife. Hey, honey, I got an idea. How about I leave that behind? Yeah.
Yeah. I mean, look, I can be totally honest in saying that like my wife is my biggest supporter, right? So like if I told her like, hey, I have an idea, I want to move to France and be away from, for you for 10 days every, 2 weeks because I need to do something, she'd be like, okay, let me help you pack your bags. Like she is total supporter in all cases. Right. But to me, like mentally, it was an easy decision for me because I knew exactly what I wanted to do. Right. And I knew I would be successful doing it had I, given myself the opportunity to do it. And I'm the type of person where like, and I was just talking to my wife about this last week, is like, I don't want to regret like not trying to do something. Like I know that I would probably fail at doing it, like maybe I'll fail at doing something, but I don't want to regret like not not being able to do it. So at that time, we're still at that exact moment when I like left, we were engaged, going to be married, right? So we hadn't been married yet. We didn't live together until we actually got married. And so at that moment, like I had nothing, that could hold me back. Like I had no debt. I paid off all my student loans. Like I had no car payments. I've never had a car payment. I, had a house I was living in. Like I didn't have anything that would so I didn't have a family or, other financial obligations I had to. And would that have changed my decision? Maybe not, but I can't say exactly. And now I've got 2 girls, right? So now I've got to worry about their well-being. But at that moment, I knew if I just gave myself enough time and I, really worked at it, I'd be successful doing it. And funny story is the first week that I was at home trading, when I thought that I had everything together, and I go through this in my very first episode on the podcast, like I lost about 10 grand. And my wife was like, hey, listen, if you think that this is what going, your trading at home is going to be, she's like, you better get your SHIT in order. Right. And, but that was like a good learning experience for me is like right off the bat, like I really quickly learned, exactly what not to do because I thought I knew what to do really early on. I was like, oh, I'll just do what I used to do in New York. But in New York, I was, basically dealing with the bank's money and millions of dollars. And at home, I was not. Right. And so then I really quickly learned, what to do. And then from there, it's just, continue to grow.
Excellent and well said, because I've often told people that you do your first deals for experience, not profit, and then later you get to profit from your experience. So sounds like you had a similar journey.
Yep.
Yep. So I got that. So you're out the gate and you start to experience this down immediately. Most people, those that actually manage to get out the gate and start something on their own, then, soon after, if they experience a loss, so to speak, they stop, they run, they experience that shock to the system and they go back to what is familiar. What prevented you from saying, okay, I lost 10 grand. I guess I just better go back to New York?
Yeah. So I think that the reality is like my biggest strength is that I really have confidence in the math behind what I do and why I do it. And now I don't have any emotional attachment to anything. So unlike a lot of investors, which I see all the time, is they have a lot of emotional attachment to a trade or a security or a company. I've got zero of that, right? And that's because of that first week at home where I lost a lot of money because what I did is I broke every rule in the rule book. Like I got too emotional. I tried to fight the markets. I tried to, win back positions. I over allocated and I broke all of my rules. And immediately that, same week, I, realized, okay, look, I know that this stuff works as long as I work the system. And I was trying to jump ahead in steps, right? So everybody tries to do that. Everyone tries to find the trick or the hack or the, shortcut, but there are no shortcuts. It's just finding the right path as soon as you can. And you still have to walk down that path. It's still going to take you a long time to get there if you do it right, but you just have to find that right path first. And so I learned that very soon afterwards that I was just making a lot of mistakes that could easily be corrected.
Got it. So let's dig into this for just a small second. There's a number of options available, meaning choices that someone could make in order to place capital, etc. My question to you, because I know that we're going to get it if I don't ask you, is why options as the vehicle?
Yeah. So the simple answer is higher probability of success, better expected outcome. That's all there is. So if you think about any investment that's out there, the relationship between how much you put into it and your probability of success and your expected outcome can vary widely, right? So if you look at the stock market, just for example, right? Your probability of success every time that you buy a stock is 50-50. I don't care who you think you are. I don't care if you're Elon Musk's brother, right? You don't know if Tesla's going up, right? That's the reality. So it's 50-50 and it's been proven. It continues to be proven every day as the markets go that they're pretty volatile and random. And so, but in that 50-50 outcome, your downside risk, just in the last, call it 15, 20 years, we've had, 2 major market corrections that have lasted, in some cases 30 or 40% downside risk. So stocks have fallen 30 or 40% or more in some cases. Okay. So that's your risk. And your upside potential is maybe 8-9% every year. So to me, that's not a good trade-off. Just based on the math, right. I have a 50-50 shot. And if I'm wrong, I've got 50% downside exposure. And if I'm right, maybe 8% upside exposure, maybe, right? that to me is not a good risk reward. I think you can look at every business and every investment in that frame of, or in that lens. So with options, you have much higher probability of success. You offset that probability of success by investing a little bit more money upfront. So yes, it does take a little bit more capital to invest, and you're not going to hit all these home runs. It's about, hitting a bunch of singles. But when you actually see how the numbers play out and like the long-term, expected outcomes and backtesting models of how options, perform, they perform much better than the market with less volatility, which means your account's not fluctuating as much and with much less capital invested. And so like, I don't ever hesitate to say it's not the holy grail. There's not a holy grail, but that's what everyone is looking to do, right? You want to outperform the market with less volatility, with less capital. And just to wrap that up, nobody knows this, and this is like my ultimate goal on my podcast is to get Warren Buffett on the show. Warren Buffett is the biggest options trader in the entire country. He trades $5 billion worth of options, and I go through it in videos, and like it's on his 10Ks, 10Qs. Like he doesn't hide it. He talks about it in like 4 or 5 pages in his annual reports. He talks about all the options trading activity that he does. He's done $5 billion worth of trades in the last couple of years. Does anybody talk about that on CNBC? Nope. Does anybody bring it up to him on, questions about like, no, it's all about the stock stuff. But he's the biggest options trader, and he runs all of his insurance businesses, which is just basically another way to trade options. Yep, to sell options. So if he's doing it on a massive scale and everyone believes that he's the greatest investor and he's had really, really good returns, which he has, why isn't everybody else doing it? Right. That's really like my biggest push to everybody's like, do what he does. That's all I'm telling you to do. Do what he does.
Indeed. Now, we just to make sure everyone stays caught up, when you said a 10K and a 10Q, for those that might not know what that is, you want to explain it for them real fast?
Yeah. So really quickly, the 10Qs are your quarterly filings. So Berkshire Hathaway, which is his biggest holding company, they file their quarterly 10Qs and then their annual 10Ks. And in there, they lay out in paragraph format and detailed financials of all of their activities as a business and all of their, subsequent subsidiaries, the Geicos and all that stuff. And he's got pages and pages and pages of the trades that he makes, the option trades that he makes. Just nobody reads them.
No, and that's what I was going to say, guys. Just know that those Ks and Qs are there for many, also known as all companies that you want
any company that's out there
that you want to research. So, and again, it's not always the most exciting reading, but it is definitely reading that if you know how to interpret it, you can go out there and make some interesting decisions. Now, with all of that being said, Kirk, I guess the question, the next question I know someone's going to ask is, how much because you mentioned, needing some money, but how much do like someone listening right now who's getting excited about this possibility, maybe for whatever reason they, their franchise ideas haven't worked or network marketing hasn't worked or, real estate didn't work the way they had hoped. They're listening to you and going, well, this sounds like I might be able to do this. How much are they looking at to get started? How much are you looking at to get started? See, here's the thing right now. When I said that, you are thinking about dollars. You're thinking about how much cash, how much money do you have? And more importantly, one of you, maybe you said, I don't have any money, so it doesn't matter. And you might not even listen to the rest of this episode. And that's unfortunate because let me tell you what's the real cost of getting anything started. It's not money. It's time. It's time. Your time. Are you willing to go through the process of figuring out the things that you don't know, being confronted with the fact that you might look stupid because did you understand something that you can't learn and look good at the same time? And that's actually okay. Here's my point. Regardless of the cost, be willing to pay it. Before I even get you back to the rest of this episode, say to yourself, you know what, Jay, I'm going to pay this cost because I got to do something. All right. In fact, while we're speaking of costs, let me give you something that I know you can absolutely do right now. Go over to cashflowdiary.com/free book. Again, cashflowdiary.com/free book. That will give you a free copy of my book, Cashflow Diary, 10 Steps to Creating Wealth in Any Economy. And you will be able to start something, make measurable steps and actions towards what it is that you say you want right now. And all that costs is, again, 30, 45 seconds of time. Now, let's get back over to Kirk and see what the cost is.
Yeah. So I think it's probably the number one question I get all the time. And here's what I have to say up front, right? If I tell you, which I will, that you don't need a lot of money to get started, please do not misinterpret that as saying that you can quit your job by trading options with $1,000, because you can't. Okay. So that's the reality, right? And
hold on. Hold
yeah.
on. I want you to say that again, because I know someone was their kid got in the way, the dog barked, or they're on the treadmill and someone yelled. Who knows? But say that again, because that was important.
Yeah. So I don't want you to misinterpret what I say when I'm going to say that you don't need a lot of money to start by misinterpreting that as you can quit your job by trading options with $1,000, because that's not the case. And although I see it all over the place, it's all online. And believe me, everybody who's ever started that, or if you ever look that up and you try some other company and service, everyone eventually comes back to me and then they send me an email and they're like, hey, look, I thought I could quit my job with like $3,000 in the bank and it didn't work out. Well, like, of course it didn't work out, right? If it worked out, then everyone would quit their job with $3,000 in the bank. So the reality is that you don't need a lot of money to start. In fact, I could even make the argument to say you need zero money to start if you want to start paper trading, which paper trading is just like virtual, trading and practicing. It's like monopoly money. So you can practice the mechanics and build up, your skills in a paper, secure, no cash involved environment. If you really want to get started, I suggest anywhere between like $3,000 and $5,000. I mean, to really cover the cost of commissions and broker fees and stuff like that. Now, on a per trade basis, like if I was to tell people like, how much money do you need just to make one trade? Probably $70. If you had $70 in your account, you could make one trade and you could just, try the system out. Now, do I think that you should if you have $70 and that's all you got to your name, is that the best use of your money? Probably not. But you know what I'm saying? Like that is the minimum that you would probably have to have.
Indeed. So in this particular case, it sounds like you have some sort of ratio for minimums and maximums relative to what I would call your capital stack that you would be willing to put at risk at any one time.
Perfect. Yeah. And this gets down to just math and probability and statistics, right? So if you think about every business that's based on math, which is mostly like insurance businesses, casinos and the like, it's all based on small risk amounts. And so the options business is no different. So my suggestion to everybody, which is probably different than a lot of other guys out there, is that all of your positions or trades should be less than 5% of your account balance. So if you've got, let's say a $10,000 account balance, then 5% or less per individual trade or position, no more than 5%, because as soon as you start going over 5%, the risk of a asystematic event, which means that you have bad trade after bad trade after bad trade after bad trade, which could happen, the risk that type of event happens and then wipes you out starts to increase dramatically. And so for that reason, again, 1% to 5% for everything.
Okay, so that let's break that down. So you said a $10,000. So if you had a $10,000 account balance, when you say 1% to 5%, I'm going to say no more than $100 to $500 in that one particular trade is what you're saying.
In that one trade. Yep. That means you'll never have more, at the very, very most, more than 20 positions on at one time.
Right. Exactly where I was going with that. Got it. So that everybody understands the language and how we're looking at this, because that, again, it's a way of diversifying the risk, because you don't know which one is the winner. Well, you can hopefully you did some research to figure out which ones is the winner or winners. And, you're also managing your downside risk. So in today's market, I mean, because it's so global, if you will.
Yep.
Is the U.S. the only place you do this? Or do you also, are there options in other markets? Because, I mean, with all this technology, we have access to so much information. How on earth does anyone narrow down where to play the game?
Yeah. So I think, the reality is that the U.S. markets are by far the leader in options. Can you trade them in, the Indian stock markets, and can you trade them in Europe and, Germany on the DAX and, the FTSE? You can trade them all over the place. But as far as liquidity goes, as far as volume goes, which is really important, because the more liquid, the more volume the market is, the better the pricing you're going to get. The U.S. is by far the leader. So I have got a lot of people who trade internationally that are from, different countries that still trade in the US markets because it's the best markets for that.
Got it. Makes perfect sense. So I guess the question becomes, when it comes down to doing options. I know some people, when they think, oh, he's a trader, they think a person who's like high strung and stressed out, every day from market open to market close. Yet you and I are doing this right now when the market is open. So which says to me that you've got something else going on. Please explain.
Yeah, I mean, look, the reality is that all the misconceptions that most people have about traders, because you see this guy probably like coked up on, like whatever, heroin, whatever, on just, like on all these, The Wolf of Wall Street, like those movies don't portray like the regular people that we are in a good light. The reality is that if you are not a day trader, which I'm not a day trader, so I want to make that clear. I am not in and out of securities every single day. So I don't buy options and then sell options a day later. I'm a position trader. And what I mean by that is I will get into a position that maybe is going to net me a profit after 30 or 45 or 60 days. Like that's my timeline. It's like 30 to 60 days for a position. So I'm going to be in a position where I have to wait, for a while to get paid in some cases, but I'm going to have positions like that on at all the time. So every kind of rolling 30, 40, 60 days, I'll have positions that come off. I'll start entering new ones. And so you just have to realize, in my eyes, it's all about the math. So I don't care any given day where the market is because I know exactly, what the math is for my positions. I know that every time I enter a new trade, I'm going to do so with about a 70% chance of success. So I expect over the course of a year, regardless of whatever I do, if I watch the markets all day or if I play with my two girls because they're basically playroom is my office as well. If I play with my two girls, no matter what I do, my eyes watching the screen does not change the math. That's the reality. So I can watch the screen all day. I can be so involved in CNBC. I can follow every announcement that the Fed does and every earnings report. And at the end of the year, all of that activity and all that stress that I put on myself didn't change the math, right? Like everyone always said, like, if I told you this, let me use this example. The sun comes up every day and goes down every night, right? No matter how much you watch the sun all day, you could stand outside and literally just watch it go across the sky and will it to do whatever you want it to. It's never going to change the outcome, right? And so like that's what people try to do. They try to force their opinions. They try to force their emotions on the market, and they basically just burn themselves out. But it still doesn't change the math. So my solution to people is figure out the math, like understand the math of whatever investment you're in. If it's options, great. If it's real estate, great. Understand the math and then let the math play itself out because it always is going to work.
I love it. And the interesting thing about that is that you said a word, though. It's a 4-letter word that a number of people don't necessarily like. And some people turn off when you say the word math because they're like, oh, not that. But math is money. And when you say money, people light up. I'm like, well, there's the same thing. And that's exactly what you're saying right here. So what would you say then? Because you said something that I thought was interesting. $1,000. I can't quit my job on $1,000 in trade options, but let's just say that someone is listening and they do have some resources. What is that dollar amount that you go, okay, you have enough, you could probably quit your job?
Yeah, I mean, it depends on where you live, right? Like I've had members who have, I've had guys that have, traded in the US forever, built up a nice, account size, and then they move to, Spain or Portugal and trade from there, but they're living on, a tenth of the income that they need there, right? Because it's, cheaper. So I think that's kind of subjective and really hard to say. I mean, but let's just put a blanket term on it. You probably have to have at least 6 figures to even start considering it.
Got it. Perfect. And that's what I'm just trying to set more expectations so that if people go, well, what about 11,000? No.
Yeah, but here's the thing, and it's funny because I don't think that that's always the case. So like I've got a lot of people who are like, they're like, Kirk, I don't need to quit my job. I love my job. I'm a teacher. I'm a this, I'm a that. I don't need, but I just want like $200 extra a month, right? And when I tell people, it's like you can do that it takes a little bit of time. It takes a little bit of effort. Yeah, you got to learn the new terminology. I mean, but for God's sakes, you learned how to drive a car when you were 16. Like that was probably tough at first, right? Like you learned how to ride a bike. Like you learned how to work an iPhone. Like we all did. So you get over that initial hump and that hurdle, and then from there, you just put yourself into a systematic or mechanical mindset. It's just like everything else. It's people log in every day and post on Facebook, right? Why can't you log in every day and make one trade? Like it's the same thing. You're doing the same thing. Like you log in every day, you make a trade. Just like you log in every day and pay. If you can log in every day and post on Facebook, you can log in every day and learn how to make an option trade.
Be careful. You're making it seem like everybody can do it.
They could. Why can't you? Yeah, I know what you're saying. But you could. For sure.
Indeed. Now, with that being said, however, what would you say it takes because I know there's a number of people, because we normally don't even come anywhere near this subject. So let's pretend most of those that are listening right now are complete option novices at this particular moment. How much practice time, how much ramp up time do you think it typically takes, the average person to go, okay, I'm ready for that first one?
I think it obviously depends, but I think if you gave yourself, let's say 3 weeks of 30 minutes a day, I think you could get to the point where you could execute one strategy on a consistent basis, right? Because that's all you're doing. You've got to learn the mechanics of it, which is how do I, navigate a broker platform? What do I look for, right? And then you start learning the trade specifics. So the math behind why I do XYZ strategy or not. But focus on one type of strategy. And so I guess I use the real estate analogy all the time is don't learn how to flip houses and do, rehabs and do multifamily and do commercial. Just learn one and then do that for a little bit. And that's what I tell people all the time to do. In fact, we did an interview with one of our members a while back, and this is a great story. He has been interviewed all over the place, bigger podcasts. He builds 150 homes a year as a home builder, right? 150 homes a year, could not possibly be more busy than what he is, and has, 4 kids, 5 kids, whatever it is, busy guy. He goes in and he makes one trade every single day. It's the exact same trade every day. He makes the same structured trade every day. It's he wakes up, he has breakfast, he plays with his kids, he makes a trade, and then he goes and builds 150 homes a year. And he doesn't deviate from that. He's really, really good at that one trade, and he does 22% annually for the last 8 years. One stinking trade. So I think that there's a little bit of a hurdle that people have to get over, but if you just do what he's doing, just focus on one type of system, thought process, strategy, and then really work that. I mean, you know how it is. It's not about learning to do everything. It's just getting really good at one thing that you're doing.
Indeed. Now, a lot of these trades that you're talking about, I know when we've traditionally used the word trade around here, it usually means you have to buy something and sell something in order to profit. Are any of these where you can actually, I guess, recoup a dividend or receive a coupon rate or anything of that nature instead of actually having to sell the asset?
So you do have to sell it, right? And so I would say the easy answer to that is you could, right? So options could be sold and then they could expire worthless, which is like insurance that you buy on your house. And if you don't use it, then that contract expires worthless and you have to buy another contract at the end of the year, right? It's just that same thought process. But when we do our back testing, when we, see what the returns are, when you actually physically close out of the position early, it's much, much, much better. So, okay, you need to do 2 trades every month, at least 2 trades every month, an open and a close. Now, the beautiful thing about it is that you can automate that system now. So just like you can auto debit, I use the analogy all the time, is every month when you get paid, you probably pay some bills automatically, or most people do auto bill pay. Well, you can do the same thing with your trades. When you set up a new trade, as soon as it gets executed, you can, and you're now in the position, you're now invested in it, you can set up an automatic closing order that will take you out at a certain price or a certain period of time. And so you can automate that back end just like you can do auto bill pay. And so that's what I tell people to do is get the front end right, because that's where you make your money in everything, right? In business and real estate and options, you make your money on the front side and then you just collect it on the back side when it gets closed out.
Whoa. Hold on. I just want to make sure that everybody understands what you just said. What you're saying is the only quote unquote real discipline I need is making sure that I make the trade, because the danger is when did I miss my window of selling? But you're saying that I can automate that so that I don't even have to be there. I just have to remember to make the next new trade.
Totally. It's all about the entry. And so like, again, let's use like a business just as a full example here, because I want to make sure people really understand it, because this is critical and important. If you bought, let's say, a vineyard in the middle of the desert and there's nobody around for 500 miles, I don't care how great the vineyard looks, right? Like, let's use it. Like, I don't care how great the vineyard looks. I don't care that you've got plasma TVs in there. You could have masseuses in the bathroom giving people massages after they go. Like, it doesn't matter. You're probably not going to be successful in that business because you didn't buy the business the right way, right? And it's like everything in life. With options, you get into the trade the right way, you can automate the back end. And that's the reality. So the ending part of it is really, really easy. You can automate that, but it's the entry point that people have to get right.
Got it. Totally understood. Now, here's what I know, Kirk, is that there's a number of people who have listened this far. We've definitely have piqued their interest. They've seen and they're hearing an entry point for them. They're like, finally, something I might be able to do. More importantly, I can get started right now. What would be the best way for them to find out more about what you guys are doing and what you're up to?
Yeah, so you can just head on over to our website at optionalpha.com. Here's the most important thing I tell everyone about it, is that I do not need to make money off of education, unlike everybody else out there. So all of our education, like 12 trading courses, all the PDF guides and downloads, all of our books, all of that stuff is 100% free, never expires. You never have to do an upgrade. There's no trial because it just never expires. It's all available for free. In fact, every single day, every day I go in and I record a video of my trades at the end of the day. And I say, okay, here are the trades I made. And these are the ones I won on. And these are the ones I lost on. And I post that video to YouTube every single day. Like nobody has done that in this entire industry. So if I lose, $5,000 in a day, okay, you're going to get a video and I'm going to say, hey, I lost $5,000 today. Or if I, make $3,000, I'm going to say, hey, here, I made $3,000 today. I'm going to post that video every single day. And again, all this content is available for free. So if you want to learn and if you want to get that education, we have it all there available for free because I truly think that it could change people's lives and therefore I don't need to charge for it.
Got it. Excellent. Well said. Now, as we continue, I've got a final question for you. I think this is going to be interesting to hear your perspective on. Let's pretend for a moment that someone listening is standing in front of the superhero outfit store. And by that, I simply mean they think they're ready to actually become that entrepreneur. They're deciding, do I need a cape? What color is it going to be? Am I doing the spandex thing? What's going to happen? But yet in the back of their head, they have this voice. And I know this voice, Kirk. I know you know it because it comes up every time we're trying to step into something bigger, better, badder for ourselves. We're trying to become more than our present place. And occasionally that voice, it tells us things like, who are you to think you can do any of these things, et cetera. And for some people, they are related to that voice. My question to you is, if you knew beyond a shadow of a doubt that the person listening would actually execute and get done what you suggest, and they would do so in the next 24 to 48 hours, what would you recommend that they do?
I think the biggest thing is you have to take the first step, which is to just watch one video or read one guide, right? You've got to take that first step and just start the process. And I'll even go a step further and say, like, as you were talking about all this, I was thinking about in my head, and this is, I don't know if I know that this is my quote, but I don't know. I doubt anybody's ever said this. To me, success is the eventual and predictable outcome of somebody who is persistent and consistent. So if you're thinking in the back of your mind, I don't know if this is going to work, success is predictable. It has no luck. In my opinion, it has no luck involved. I think it is the outcome of somebody who's willing to be persistent and consistent. And that just takes one first step. You just have to knock over that first domino.
Indeed. And you've made that first domino rather easy, sir. So I just want to say thank you for taking the time here to share your story. And most importantly, letting us know that, there's yet another option out there that many have not considered, and also sharing your wisdom here with us today at the Cashflow Diary.
Thanks for having me.
All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. What does that mean today? Well, I think you're going over to optionalpha.com. Why? Because you know that you want to take advantage of something for free. But by taking advantage, I don't mean just sign up. I mean actually take some action, watch the videos, make something happen, because this is a completely different entry point, but it is also possible regardless of your schedule. What's important, as you just heard, is that you might just want to begin to develop your ability to be persistent and consistent. It's been fun talking to you guys today. I look forward to talking to you soon. Until next time.